Hey traders, Jason here from Leavitt Brothers. There's a lot going on out there. News flow is relentless. I guess this is the norm because the media has to pay the bills, so even if there's nothing to talk about, they'll come up with something to fill the airtime. Plus, with social media, small stories get posted over and over and over and take on a life of their own as big stories. Political news is heavy between tariff talks and Trump's Supreme Court nominee and other stuff. There's no shortage of stuff going on either. But several of the indexes are hitting new highs, and since we care more about the price action than anything else, it seems like a good time to take a deep breath, check out the charts, and assess exactly how the market has absorbed all the stuff going on in the world. Okay, let's start off with the S&P 500 monthly chart. Okay, charts don't get better looking than this. Okay, trend up 2012, 2013, 14, sideways period, then a breakout, and now we're in the middle of like a 3-year uptrend. The index has not traded below. I traded below, but it has not closed below its 10-month moving average since the beginning of 2016. Okay, it ran away from the moving average earlier this year, came back down, rode it up for about 6 months, and now is moving off it again. This chart is super bullish. Anyone who is a longer-term investor, even somebody who wants to develop a bias from a longer-term time frame and then zoom in to pinpoint trades, this is your backdrop. The market is super, super strong. Today, the S&P hit a new high. Even if you look down here at the volume bars over the last 23, 24 months, let me see if I can highlight this. Last 23, 24 months, there's only 1, 2, 3 down months. Okay, so when you're up 20 out of 20 months, obviously things are going really well. Okay, let's move on. Here are the S&P 500 weekly and the Russell weekly. They are just as bullish. Okay, the 50-week moving average in both cases has been very important. You could pause the video if you want to look really closely at where these arrows are and where the indexes hit the moving averages. As long as those moving averages hold, my long-term bias is going to be up. And with the market today, with the S&P at like 25, 20, 29, 25 right now, at least at the time that I clipped this chart, and the moving average down at 27, 25, and we have a 200-point buffer before I'm even going to be a little bit worried about the long term. Okay, so these charts are super bullish. You can zoom in and say, hey, the S&P has moved up the last 2 weeks, and the Russell has kind of moved down. It's not a big deal. Okay, they can move apart for short periods of time. It's fine. Overall, these charts are in great shape. Now let's zip through all the daily charts of the indexes. Okay, so here's the Dow. It rallied up. It's consolidated in a pretty wide range for most of this year, and then today it hit a new high. Maybe we get a little resistance. Maybe we get a little push through. I don't know. It doesn't really matter. All I know is that the Dow came down. It based for a little bit, and it's been trending up for the last couple months, and it hit a new high. Okay, so that sequence, even if I wasn't showing you this chart, if I just simply said, hey, the Dow corrected the first half of the year, but it's been trending up the last couple months and it just hit an all-time high, even if you never looked at the chart, you'd have to come to the conclusion that the market's in good shape. 200's moving up, 50's moving up, everything's going good here. Anything can go in the near term, but overall, this chart's in really good shape. Mid-caps consolidated here for a few months, broke out, and has been just putting in higher highs and higher lows ever since. Okay, you could draw a trend line maybe somewhere over here if you want. Okay, and you could argue that, hey, the index is just kind of consolidating at a higher level. That's fine. Classic trading stuff. Super bullish implications. No, it's not hitting a new high with some of the other indexes, but still, the trend is obviously up, and there are no worries here whatsoever. Nasdaq, wider swings, but trend still in place. Higher high, higher lows, going back many months. Bigger swings earlier this year, smaller swings over the last couple months. Nothing about this chart warns me about anything. Okay, 200 is gently trending up. You can't be anything but bullish the market with this chart in the form it's in. Russell 2000, consolidate here at the beginning of the year, broke out, consolidate again, broke out. Okay, you could try and argue that, like, hey, this is, it's falling, the Dow's making a new high and this thing's falling. I mean, this is a bullish pattern. Okay, for it to break out and for it to drift down and kind of back test, kind of do a throwback back test to its previous pattern, and just kind of drift down against the overall trend, it's bullish stuff. Okay. You can't be anything other than bullish looking at this chart either. It's in great shape. So big caps, small caps, doesn't matter. Here's the SP 500, last one. Okay, rally up, end of last year, big consolidation pattern, broke out in August, came back down, tested the top of the range, and then moved up, and today it gapped up, and now it's at an all-time high. So again, you can't be anything but bullish here. So it doesn't matter, like big caps, small caps, tech stocks, mid-cap stocks, everywhere you look, every single index has hit a new high at some point in time in the last couple weeks, and they're all trending up. You just can't argue with these charts, okay? So if you're a short-term trader, sure, anything goes in the near term, and you might find yourself going long, going short. But if you're an intermediate-term trader or a long-term trader, these charts tell you that you should only be going long. And while, yeah, shorts will work here and there, if your desire is to make things a little bit easier and keep it simple and trade in the direction of the trend, then you obviously should be trending up or trading to alongside. All right, let's look beneath the surface and look at some of the breadth indicators. All right, here is the S&P 500 up top against the advanced decline line at the NYSE. Obviously, it's trending up. The 50 at most times has acted as support. It's acting as support now. There are no warnings here. When advancers are steadily beating decliners over time, the market is likely to keep going up. Okay. Yeah, the math works out sometimes that the market could drop some, even though the AD line goes up. It doesn't happen. You can also zoom in really close and say, hey, the market's making a new high today, but the AD line is not making a new high. Fine. These little things happen on a near-term basis, but when you back up and look at this chart over the course of, this chart covers almost 2 years, you can't be anything other than bullish because the chart is just gently trending up. Trouble will appear here first before it appears in the indexes. This chart will roll over, go below its 50, fail to get back above its 50. It'll give a warning a couple months ahead of time that there's trouble brewing, and right now there are no warnings. So again, just like the index charts, the only side of the market to be on is the long side. Let me speed things up a little bit. Here is the SP 500 versus the 80 volume line. Okay, so whereas the 80 line lets each stock have equal weight, okay, it doesn't matter if you're a small cap or you're Apple, you count the same. With the 80 volume line, higher volume stocks have more influence. The message is the same. We had a glitch here in end of January, beginning of February. Other than that, it's been steadily trending up all year. Okay, there's nothing that in this chart that tells me there's trouble brewing. Okay, 80 volume, solid, going back a long time. Let me cover the same two charts with the Nasdaq. Up top is the Nas, down below is the 80 line at the Nas. Just like the Nas, this chart tends to have wilder swings, but the trend has been in place going all the way back a year to like last August 2017. So higher highs, higher lows, 50-day moving average mostly trending up. This confirms the price action. Here's the Nasdaq 80 volume line, same thing. Okay, this confirms the price action. We got huge rally in 2017, a pause here first couple months of 2018, a breakout. We're not moving up like with force or with a lot of energy, but again, new high was put in place earlier this month, and the 50 is moving up, and there's no reason to believe that there's trouble brewing per this chart. Okay, next chart. Here's where we get a little bit of a warning. SP 500 up top, NYSE new highs down below. Okay, so you can see at the end of last year, the market rallied with force, and we got new highs that printed up here. Should highlight it as I talk. New highs printed up here, and then when the market traded flat, first several months of this year, new highs printed in a much lower box. So you would expect that now that the market is trending up again, it's been trending up all the way since April, you'd expect new highs to be printing kind of up here, but they're not. They're printing down here. So this is a warning. Somehow, some way, the market is hitting new highs. It's hit numerous new highs the last couple months, but new highs among individual stocks are lacking. They're just nowhere to be found. And mathematically, this can take place because of the way the S&P is calculated, but eventually we're going to want to see more new highs among individual stocks. Okay, so this is a little bit of a warning. The 80 volume line, they say everything's on board. They confirm the price action. New highs, they don't confirm the price action. We want to see new highs here. Here is new highs among the NASDAQ, which is it's basically the same thing. It's like each one of these runs that the NASDAQ has gone on, end of last year, February, March. Here we got like May, June. We got an uptick in new highs. Here we are. The NAS is almost at an all-time high. It's been trending up since April. I mean, like literally. I mean, this is like classic charting, trend following, whatever you want to call it, 101. Just higher highs, higher lows going back several months. And yet new lows are like way down here. They're not that much higher than, back here when, in February, March, April, when the market was like, did its double bottom. So again, we're going to want to see new highs here. Okay, I don't know why we don't have more highs. I don't know how the index is so close to its all-time high when so few individual stocks are trading at an all-time high, or at least at a 52-week high. But we want to see some change here. We want to see more stocks participating. Next chart, S&P 500 up top. Down below is the percentage of S&P stocks above their 50-day moving average. This chart confirms, I should say this indicator confirms the price action. Okay, when the market's trending up and doing well, you get steady prints, like up here above like 55%. We're getting that right now. Okay, we don't have any high prints, but that's fine. As long as this indicator stays above 55% and just moves up and down, that confirms the price action. So everything is on board here, so there are no warnings. Okay, same concept. Here is the same chart with 200-day moving average. This one has lagged for a while. Okay, so last second half of last year, market trended up and then ramped up at the end of the year. And in January, we got percentage of stocks above their 200-day moving average, printed up here. Market not hesitated, but it corrected first half of this year, and we got many lower prints. But the S&P has been trending up for this long. It has never closed below its 200-day moving average. In fact, it's been distancing itself from its 200-day moving average. I mean, here's this 200, and there's the price action if I were to draw some sort of linear regression line. So it's distancing itself from its 200-day moving average, and yet the number of individual stocks trading above their 200s it's been moving up, but it's not as high as you'd think. Okay, it's not as high as you'd want. So this is another little bit of a warning. For some reason, there's a lack of participation. Now, it's not bad. You still have like 71% of stocks are above their 200. You just expect it to be a little bit higher. Maybe I'm reading too much into it. The interval here is only 2 points, so the difference between a print here and a print here is only like 5%, so maybe it's not that big a deal. I'm still just observing that the prints here don't match what I see over here, so it's a little bit of a warning. Okay, so overall, the price action is fantastic. Okay, all the indexes have hit new highs at some point in the last couple months. Considering this is the weakest time of year, and historically it's even weaker coming before midterm elections, the fact that the market can do so well is super bullish. Okay, think about it. If all the bears can muster right now is some choppy trading, then we have a lot more upside to go. Okay, near term, anything goes. That's always the case. But overall, I like the market. Okay, thanks for listening. If you like the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube. Come check us out at Leavitt Brothers, where we provide trading ideas and market analysis to independent traders, funds, financial advisors. Okay, again, thanks for listening, and I will see you next time.